Hey everyone, welcome to this week's crypto update. So this week I'm going to continue the trend of these videos where I want to explain a different part of the market that I think is going to have a huge upswing and really a breakout moment during the next bull market in the crypto market. So the ones that I've covered so far are real yield protocols like GMX, and then I went into protocol owned liquidity like Olympus Finance. And now the one I want to get into this week is derivative products. So this also ties into the whole treasury situation that has been definitely an eye-opener in this bear market, because a lot of the organizations out there in crypto and the projects or the teams behind these projects have treasuries that they use to fund their operations. And so obviously with a treasury, you want that to be full of somewhat reliable investments that don't crash in a bear market. But the problem is a lot of these treasuries only owned the token that runs on the protocol. So for example, the Uniswap treasury is still the biggest, I believe, in all of DeFi, and that was over $15 billion worth of value in the height of the bull market. But now, because of the crash, their treasury has fallen all the way to, I think, $2.2 billion. So they've lost over 13 billion dollars during this bear market from their treasury because they didn't diversify. They didn't hold, slightly or much less risky assets. They only had their own token, so it was very dependent on the demand for that token rather than managing it in a smarter way. That's the case for a lot of these treasuries. So I think going forward, these teams are going to look for way better opportunities to invest in a better way that will withstand bear markets much better, because as we know, bear markets in crypto are brutal. Altcoins go down 90% or more for the most part. That's definitely what we've been seeing so far in 2022. So I want to get into a project that has a solution for this and actually is already helping several different projects manage their treasuries, and that is Ribbon Finance. And Ribbon is a project that actually creates custom strategies for option trading. And when you think options, you're probably thinking risky, buy a call, buy a put, things where you're highly leveraged. You can make a lot of money, but you can also easily lose 100% in a trade. This is different. This is a lot less risky strategies like covered calls, selling puts, which limit your upside, but also limit your downside in a huge way. So this is what Ribbon does. And again, treasuries are already beginning to use Ribbon. So I'm going to walk everyone through what they're doing. So I'm going to share my screen here. And as you can see, this is the main Ribbon Finance screen. This is their primary project or primary product, which is called Option Vaults. And these run different strategies. Like I said, covered calls, you can see here in this vault, put selling like this vault. And really these benefit if the market is relatively stable. So if the market is volatile, you might take a loss here and there, but nowhere near 100% loss as with a normal, just naked buying option strategy, and nowhere near, the 90% loss that a lot of these altcoins have faced during this bear market. So you can see the yields right now, these projected yields at least are pretty high. That's not to say they're actually going to play out that way, but it's good to see, consistent available gains during a bear market. And an income strategy right now is obviously going to be really appealing to a lot of people. So Ribbon Finance is actually doing pretty well right now in terms of the demand that they've been seeing for their products. And for that reason, they've actually come out with several more products, which we're going to take a look at in just a moment. But one of their biggest developments on top of these, so these are the vaults that anybody can go onto their platform and use. They also have special customizable vaults that are tailored to the needs of any given treasury in the crypto market. So for example, as this guy points out, I'm not even going to try to pronounce the name. I think it's Vichudinov, but he is a member of the Ribbon Finance team, and he points out here that these are four big protocols. So you got Perpetual Protocol, one of the leading futures trading DeFi platforms. Abracadabra Money, which is a pretty big lending protocol on the Avalanche blockchain. Balancer, which is a huge liquidity pool protocol on Uniswap where you can trade and earn interest, and Badger DAO, which is also on Ethereum, and that is bringing DeFi to Bitcoin. So they have a variety of different Bitcoin products. But they all have money in the Ribbon treasury, and they've so far made over $500,000 in premiums in USDC. So these protocols are now incentivized to, put their money into some income, or primarily income creation strategy. That's exactly what Ribbon offers, and they put millions of dollars into this. I know that Perpetual was their first customer. They put in $1 million. Not sure the other three have disclosed the amount that they've put in, but clearly it's been a lot if they've already made $500,000 in premiums. And this is just within the past 8 months for Perpetual. So it's been less than 8 months for the other three. So that's definitely an impressive amount of money that they've been able to make during a really brutal bear market. So obviously the demand for this is only going to go up as more protocols want to put their treasury funds into a lot safer investments. So another one of their products is Ribbon Lend. And this is where anybody can go in and lend their money to institutional players. So here we've got Wintermute and Folkvang. These are two huge market makers in crypto. So, they've got lots of money, lots of liquidity available to pay out in interest. And Ribbon connects just the everyday users with these platforms. And that is super important. That's something that we're not seeing much yet in crypto. And Ribbon actually was the one that pioneered the vaults, and I think they're definitely at the forefront with institutional lending as well. So these APRs here obviously are great. If you go into Aave, Compound, Maker, something like that, the APRs are basically nothing at this point. So you might as well buy a 10-year treasury bond, because that's a lot more than you're going to make in the traditional DeFi protocols with the lending and borrowing. Here you can earn way higher yields, over 10%, which obviously is also going to be attractive. And also this is kind of taking on a different risk than the option vaults. So with the option vaults, you're taking on the risk of increased volatility in the market. So if there's a huge price swing, during May and June, a lot of those vaults actually got hit pretty hard. Not as hard as you would have gotten hit if you were just exposed to the market itself, but still, some of those strategies lost like 10 to 20% or more in a week. Still not as much as most of the cryptos out there, and a lot of them have recovered a lot of that money. But this is a different risk set. So you are relying on the credit worthiness of the counterparty. So you've got counterparty risk or credit risk, whatever you want to call it. Their ability to pay you back is what you're risking. And that is why it's so important that Ribbon vets these customers. So you can see that they have ratings. This is based on a company called Credora's rating system. They oversee billions of dollars worth of liquidity in crypto. And they've definitely made a name for themselves in the credit and the DeFi credit space. So Folkvang actually has the highest rating, a AA, and Wintermute has the second highest rating, a single A, out of a scale that has 6 different tiers of creditworthiness. But still, these are projects that are these are players in the market makers that have billions and billions of dollars worth of capital, and you can see that this has already attracted a decent amount of money. The Ribbon Lend platform itself only launched last month. It hasn't even been a full month yet, and you can see that there are already almost $12 million being lent out to Folkvang and almost $7 million being lent out to Wintermute. So again, pretty solid business so far. Definitely popular, considering that it's really hard to find double-digit yields right now in crypto. So the last thing that I want to go over with Ribbon is their upcoming option exchange. So as of now, the only way you can trade options through Ribbon is to deposit money into a vault and let them take it over from there with their code that automatically or autonomously manages that money for you. But in the future, I think it's still doing Q4. They are coming out with a full-fledged option exchange called Avo, and this is going to be a huge deal because right now Ribbon has to use other players for their actual option trading. So you deposit your money into a vault, they take the money, their code, they run their code, the code invests it but it's not in their own platform. They don't actually have their own option exchange yet. Instead, it is in a different option exchange called Open. And Open right now is the biggest option market in DeFi, but I think Avo is going to blow them out of the water when it comes out. And you can see here with the option TVL rankings, TVL stands for total value locked. So this is the amount of money that's been deposited in total into each option platform. You can see Open is number 1 with almost 90 million in TVL. Ribbon is number 2 with over 68 million, and then it goes on from there. But Ribbon is going to use Avo for all their option trading, obviously, since they are associated with the project. And that is going to be huge for Ribbon because it gives them their kind of a flywheel effect and helps them be self-reliant on their option trading. And it's also good for Avo because Avo then gets a huge customer right off the bat, and the liquidity is going to be there by Ribbon, and it's going to draw even more users into that protocol because the biggest thing missing from DeFi options right now is liquidity. There's just not that much. And while 90 million, 68 million might sound like a lot, if you look at the overall TVL for DeFi, the regular trading protocols, you can see Uniswap 4.64 billion, Aave 5 billion, but that's not really a DEX. Let's see, Balancer 1.57 billion. Just way more liquidity overall for the exchanges that you can trade cryptos on. And I think Avo is going to bring that same liquidity over time to the options field, because centralized options obviously are a huge project or a huge product with billions and billions of dollars traded in those. Right now, that's not possible in DeFi, but Avo is going to change that game. So that is it for the looking over Ribbon's products, and I also want to get into the fundamentals. So, like I said, $68 million in TVL so far. But it kind of stood out earlier this year because while everything was, on the brink of crashing, Ribbon was actually making new highs in TVL, and they got over 300 million at one point in April, and even into May. They had, right before the crash, they had 309 million in TVL, 309.88 million on May 5th. So they were a huge player even up until that crash in May. So in 2022, a lot of people kind of left DeFi, left crypto, but Ribbon was still pulling in a lot of money, which I found very, very interesting. Obviously, since then, it's fallen off a cliff, as with everything else. If we look at the total TVL in crypto, that has done the same thing, and it has not recovered since. But I think Ribbon is going to be one of the projects that recovers the fastest and really brings in the most quality kind of customers, like DeFi treasuries and like institutional players that people can lend out to. So that's looking at their TVL. The downside to Ribbon, really the only downside that I'm seeing at this point is their token supply. So they have diluted their token price into oblivion really over the past 5 months, as you can see on this chart. So if we go back to May, and on May 8th, there were a little over 52 million RBN tokens in circulation. Now, a little over 5 months later, that's all the way up to 540 million tokens in circulation. So that's over a 10x in just over 5 months, which has done a huge number on the price. So this was about 69 cents when that dilution started. Now it is at about 30 cents, but still with a 10x move in the inflation, that's actually not too bad. A 50% drop in the token price. Obviously, though, it's had a very rough 2022. But if we look at the overall market cap, it's actually higher than it was back here in December of last year. So let's see, on December 31st, it was $101 million in market cap. Now it's 150. So the token price is way down, but the market cap has actually gone up about 50% this year, which means that there is demand for the token. It's just not matching the inflation, which is going to go for anything when the inflation is 10x in 5 months. That's going to do a number on the price either way. But going forward, there is only a total possible supply of 1 billion tokens for Ribbon Finance. So they're over halfway there now. As far as I've seen, there's no plans to, do another huge jump like this from 335 to 526 million in the span of a couple days. To my knowledge, they're not planning on doing something like that again. Obviously, that is to be seen at this point, but nevertheless, in the next bull market, I think that Ribbon is going to stand out as one of the main option players in the DeFi market. They're probably going to be the leader, and I think that overall, if we're talking about price predictions, I would say that a $5 billion fully diluted value, which would mean it accounts for all the tokens possible, which is 1 billion. That would be a $5 price target on Ribbon, which is over 30x what it was at the bottom, which I think was like 16 cents. And $5 compared to what it is now, about 60 or 30 cents, that's like a 16x, I think. So huge potential here for Ribbon, huge potential for derivatives in DeFi in general. This is going to be a hot market as treasuries start to look at income strategies to manage their money, and also as more people want to lend out to credible players like market makers that Ribbon is pulling in through their lend product. So that is it for this update. Again, very bullish on derivatives, bullish on Ribbon, and I hope everybody found this useful. If you have any questions, definitely let me know in the comments. Until then, I will see you again next Wednesday for the stock and macro update, and thank you everybody so much for watching.